Yeah, I'm short. Okay. Let's cover the topic about stop loss placement. A lot of people have questions about it. Some people like to use stop losses. Some people don't like to use stop losses. It just depends on your experience and style of trading. Some people just get out, hit the close button real quick, whatever the case is. Once they see, hey guys, welcome back to the channel. This is Future Trading with Mike, and today again we are looking at the E-mini S&P 500 futures. That is the ES, which is a derivative of the major index, the S&P 500. Like this first to start off in each one of my videos, I always like to thank the subs and subscribers, those who have currently subscribed to the channel, and hopefully you've already hit that little bell icon, the push notification or post notification. Um, what that does is if you go ahead and click that little bell icon, maybe you have, maybe you haven't. If you haven't, go ahead and take the time to do so. I'll give you a couple of seconds here. All right. So if you click the little bell notification, what it does, it will ensure that you never miss one of the uploads, guys. I know you guys have joined the team and subscribed to the channel for a reason. And so go ahead if you want to make sure that you continue to get, um, you know, coverage of the content here on the channel. Make sure to click that little bell icon, it's little bell shape um, image there that it will ensure that you never miss one of the videos. So click that, and each time, when you do that, you'll get notifications when I post to the channel. I post 5 days a week, sometimes 6 days a week, because on Saturday, sometimes I'll, give free information or freebie information, and I'll post a video talking about certain topics of content. As well, if you're a first-time viewer, congratulations, however you found the channel. We thank you for watching the video today, and if you could go ahead and click that subscribe button. Content here is free, nothing to sell. I'm a price action trader, and basically what I do is trade this particular market, the mini S&P 500, 5 days a week, most times. So you can go back and watch prior videos. I have, I think, about 180 videos now on the channel. So we're trying to get the subscription base up here and just providing value, just good content covering price action, discussion about the strategy I use, which is nothing more than to just pull back to certain areas of high probability support and resistance levels, which I like to trade more so the supply demand areas or zones at the support and resistance areas. So go ahead and join the team. Click the subscribe button and watch today's video and go back and watch some of the prior videos. All right, let's go ahead and jump into the video today. This is my live recorded session here, and we'll take a look at the 60 range to start off with, okay? All right, I always start with the higher time frame and everything I do because the higher time frame is going to pretty much put you in, I say, the right direction of how you should be or what you should be looking for when you're ready to start trading, guys. We'll look at the higher time frame because I always like to look at this to kind of see what happened overnight or what's happened in the last few days, I should say. So let me make this a little larger. Now you can see since the 8th of March, we've been kind of moving to, well, we have been moving to the upside, so the market's been bullish after we've had a bit of a sell-off, prior to early part of February leading up to market did push up at the end of February, and then we got a pullback. So basically, you really want to look at it from looking back, about a month back almost. Back in February, the latter part of February, the market really started pushing back to the upside. This is the bottom of the swing right here to the downside, or this leg to the downside. The market pushes back up, retraces, and then if you really look at it right now, it has not broke this low right here, sitting at 40.93, and we have a high sitting right here on this leg to the upside, right here at 44.11. Okay, so if you look at it from a higher time frame, we are in a wedge trading, kind of moving sideways, but that doesn't mean that you can't look for opportunities to either go short or long. So that's what we're here to do today, is take a look to see, kind of depict how we're going to trade today or how I'm going to trade today. Right now, we are at a top of a leg at a high right here. So the market is bouncing off that area right there. This was an area back on March the 3rd where price came back up here, rejected this area up in here, which was resistance, and then the market pushed down. Okay, so it sold off some, um, came down here, and so basically this is just a pullback, and then looks like it may try to break higher. Hopefully we get the break today at above 44.11, and maybe we'll come up and test, you know, push to this low volume node, maybe test 44.25, and then push up higher, maybe testing 45.52. I'm not saying that's going to happen today, all the way up here, but we'll see, because this is resistance right now, and we can, definitely bounce, which we have already done. So if you look, um, I believe into the right at the close of the session yesterday, price came up back to this area here, where I had this rectangle box at, bounced out of that area, or from that area, and sold off some. So we went from 44.07 down to 43.64 overnight, and basically bounced right here at support at the price level of 43.64. Price pulling back to support, hitting this high volume node or high volume area, and support sitting right here, and now it's rejected that area and pushed back up some. So we do have a little high sitting right here at 44.05. So right now, if I'm looking at the higher time frame, price pushing down, pulling, so we haven't really, yeah, we have. So we broke structure to the downside even on the higher time frame. So I guess at this point right here, me, I would probably be looking for maybe a short, just kind of have more so a short directional bias at the market right now, because we hit this high up here, which was resistance, and kind of broke some structure to the downside. I mean, we broke structure here, price pushed down, pulled back, broke a little lower, breaking structure on the swing to the downside as well, but we have retraced back. So if we break above 44.94, we probably will maybe break this area and push higher. So right now I'm just gonna be mindful and see. So what happens. Okay, now what I've taken this trade right here, the bounce at 43.64. No, probably not here, because I mean, it is support. It just depends on what the 12 range chart would have shown me at the time, but it is an area of support where the market broke higher here, meaning breaking a high here, breaking structure, and it also broke structure to the left hand side. So yes, this could have been an area definitely somebody to take a long from, stab from. But those that know how I trade, I really like to see price pull back into the area of within the swing where, price pushed up here, pull back, and then more accumulation of buying took place here, and then you take the trade to the upside, back to the upside. If price would have pulled back to this, but so far it just bounced right at the top, which I call the neck of the swing, and it's bounced here, I guess around 8:45 this morning, and pushed higher, trying to break now. Let's see, show it to you. Trying to break right above this little high right here. Okay, you see that green candle? So if we close above what you just did, okay, so we're probably gonna push higher now. So let's be mindful of what's going on now in the market. Okay, price is still, like I said, see, it's running to the upside, so it broke that area there, and it's still testing resistance at the top stuff. So we just need to be careful here. Let's go to the left here. All right, so we have this area here, this high volume area is right here. You see this, the high volume area? Okay, this here is an area of resistance, but it's what I consider a small area of kind of supply in a sense. Price could actually, we could look for something to happen right here. Now this is a 60 range chart, it's a higher time frame chart. So price broke structure on the way down here, breaking this area here, but it also broke this area of support right here when it pulled back and broke lower. So it broke structure here, broke structure here. So this is at the right here where this line is at. This red line is, this is where price is at right now. So you can look for something maybe to happen in this area. So let's kind of just wait it out to see. And we are at the top at resistance, this high here, and at the top of this area here. So let's see. I'm not saying that it's going to just, fall to the floor here, but it could possibly reject in this area and then push higher. I mean, excuse me, push lower. But we got to see price breaking structure to the downside first. Okay. But it's tested this area once already, so it did make, fall through, swing down, pull back, made another low. So it's a possibility that it could reject this area again and then push lower. So um, I guess this is the 24 range here, guys. So 24 range. Going back and forth between charts, so bear with me. Um, Trying to see. It was a little long right here at 9:35, shortly after the market opened up. Did not take it at all. I don't trade the first 20, 25 minutes after the market opens up. Today's Friday, so and it is contract expiration, so be careful about this too because um, we've had quite a bit of news this week, and again, we're closing out the contract for the March contract. So if you haven't already, maybe rolled over, well, you should have already rolled over to the June contract because, of course, you can see that there's more um, volume being traded on the June contract right now than there is than the March. Okay, so let me go back because I like to see just going back here on the chart. Where are we at? 40. Where's price at right now? It's at 44.06. Okay. So, whoops. Yeah, bouncing off this area right here. Okay. Which is resistance. Hmm. Not sure. It might be one of those days where we just kind of hold off. I'm going to talk about a topic here in a little bit about stop loss placement. Got a couple questions about that. I did post a video, I believe it's back in sometime in February the 19th, I believe it was, covering this about stop loss. And I'm gonna go through it again, kind of give you some examples to show you uh, areas where typically where I don't place my stop loss at versus where I do put it at. Well, where I would put it at. Um, a lot of times you don't see me put a stop loss right in the market because once you have years of experience, and some people it's controversial. Some people will say, "Oh, you don't trade on a stop." Um, it depends on the person. Like I have my finger on the close button at the moment because I know exactly where. Once you have spent a lot of time studying the markets and knowing what they're going to do, and when I say studying the markets, I mean look at the charts, back testing, and you understand the driving force behind the markets, which is the institutions, and you understand the game that's being played behind closed doors in a sense, then you know how they move. And if you move with them, then you should know where to put your stop loss at 9 times out of 10. Unless there's an economic news event, because which I don't trade around, because that's going to like sway the market to move and get really volatile and start seeing some swings to where the market's going to push up, push down, push up, push down. You don't want to be trading in that type of environment. So you have to know just as soon as you get into a trade, or even before you get into a trade, where to put where your stop loss should lie at. Whether you put a hard stop or if you just have your finger on that close button, and the moment price comes back or above that area, you're closing it out real quick. So, and that's typically what I do because I know that the institutions are going to test certain areas, and then they're just trying to shop for stops. And what they're doing is they're going to stop you out and then push the market in the same direction in which you wanted the market to move originally. Okay, so understand that concept. Um, let's go back. Yeah, so we're breaking higher. See, price is breaking above now. So, all right. So, yeah. So let's go back and look at the 1 hour, I mean, the 60 minute again. And yeah. So have we broke? Yep. We broke this area. We broke this high right here. I just said at 44.11, which I was talking about early on into the, kind of doing a little pre-market cap or recap analysis of the market. So where can we kind of maybe bounce or stall out at? Um, I mean, we're sitting right here at this top of this high volume area, little swing right here, but price could definitely, let's see. Yeah, I mean, we're still in this area right here. Price can reject this area, but it also can possibly pull back up to or trace back up to around the 40, um, 44.30, maybe 44.32 area, and maybe even possibly higher up to 44.50. But that's a long shot. I mean, I'm not saying it can't happen, but we could definitely move through this low volume area. And 44.50 is a pivot area, so it's a half number. So I'm just waiting to see if we can get some fall through, maybe some rejection where we're at now, being we're right at the top of this high volume area. But we are, we're at an area of resistance. So no trades yet, but we'll see what happens. This is trading is all about being patient and not just jumping in and out. Because for one, you will do some damage to your account, and as well as you will be paying out more commissions than you should be. So we're getting some pullback now. Um, you can see it on the 12 range as well as on the 4 range. Kind of pull back, bounce off that area of resistance, like I said. So that was probably a short. I didn't take it. It was definitely short. Okay, sorry. Didn't get into that trade. Um, yeah. Mm, mm. I don't know. Price. We'll see what happens here. Price breaks above 44.12. I'm gonna see what happens. But we are bullish. You see Delta. Look at Delta. It's lots of buying, swinging to the upside here. But yeah, let's see what happens. Yeah, let's see what's going to happen here. Prices. Okay. Uh, it can bounce here, but be mindful this area right here is an area. This is support here, but this is price could push down here, pull back, and then push lower and come back and test this area down here. So, but this is off a higher time frame, off the 1 hour. I mean, off the 60 range chart. So, um, hmm, still pushing lower. So, yeah, price is pulling back pretty hard right now. So, yeah, let's see. What is the market trying to do here? We're at a round number here. So, right here. Um, yeah, right here where price is at. It could pause at, but I'm going to wait. See price bouncing because you got a round number right there. So I'm going to wait it out right here. Quick little scalp for a point. Come on. Yep, the scalping real quick, guys. A little short back to the downside right here. See rejection right here at the 4 range. Trading the micro level. So, but I'm waiting to see what price is going to do in this area. Let's 6. Yeah. Let's take a look. Hmm. Yeah. Let's see. Mm-mm-mm. All right, this right here is, let's see. Uh, yeah, let's wait and see. It was long here. I missed it. Price bouncing off an area of support here. Pulling back right here. This was, well, actually, let me see something because, yeah, there was a long there. I missed it. Be careful because we have the top volume noise sitting right here. So I did miss that entry there. It's okay. Can't take them all. Um, I'm gonna tell you guys, the price can break this area up here. Let's see, 44. Yeah, price can break this area up here. All right, I'm long. I'm long, guys. Didn't pay attention to something. Okay, I see it here. I'm going to scalp this area for right now. Okay, price is bouncing off of it. Man, it's okay. I'm scalping this area for right now. Let's see. Come on. All right. Yep. Come on. Okay. I am just scalping this area. Come on. Looking for price to break above. Let's see here. 44, 8.5. Come on. Just wanting to pull back first though. Hmm. I'm pretty confident it's going to pull up here. Pull back to the upside. I think the trade just too early on this trade here, but we should pull back to the upside here. It breaks above 44.0850, then yeah, go ahead and break through this. Don't play games. Okay, come on. I'm gonna scout this area and go ahead and should push up. There we go. What in the world? Okay. What I want to see it do is break 44.0850. Okay. Let's see if it's going to do it. Not sure. It's got to break. To me, I got to see it break. I'm gonna move this line up here. Got to see it break. This area right here. Okay, come on, break that area there. 1150. Okay, let's see what it's gonna do. It could just push down. Today is the 18th, by the way, guys. I don't believe I said that. It's Friday. I know I said that part. Just up 15 ticks, guys. Just scalping along here. Market's not giving me too much to trade from today. It's okay. If it breaks above 40, 44,850, I'll be interested in going long for maybe a, you know, back up to somewhere between 44.11 and 44.12 and a half. But we have to see what happens. 50. Yeah, we're just moving sideways right now. You can see it doing that on the 12 range and on the 4 range. I got into early on that trade. I should have waited for price to pull back some and then go long. So, but I knew what price was going to do. Just be confident in your trade, and it's all about trading from the right location, the right area. If you're not doing that, then you're gonna get stopped out. Moving sideways. Come on, push up. And a lot of questions people ask about, how do I enter the market? Sometimes I use a chart trader, but a lot of times I use a dome, and I don't enter with market orders, guys. I use limits in a sense, but um, they're not limits that I place into the market, like like waiting for price to get there. I don't do that type of trading. If I'm going long, I press either buy bid or buy ask. Try to do buy bid because you don't really get any slippage, and it really sets your order in as more of a limit. Buy ask, you may get like one, maybe two tick slippage sometimes. Typically none. It normally gets you right in. So I typically do buy ask if I'm going long, and then sell bid if I'm going short. Yeah, market just playing around, right? Not wanting to do much. Ah, slow day. Not much going on like yesterday. Little chop up to the upside here, making a little higher highs and higher lows. Okay, so price pulled back some. That's rejecting. It's pushing lower. So, um, hmm, let's see. Let's see. Let's see. Gotta be careful here. Be careful here. We're in a low volume area on a 12 range chart right here. Price could come on down in this area here. Market's not giving too much to too many opportunities or too much. Okay, at this point here, I'd be looking for a pullback. Yeah, I'll be honest with you. So I'm gonna wait. Let's see if it's gonna give me a pullback. Um, there was supply sitting right here. I didn't jump into that. Price pulled back to this area right here. It didn't come back to the area uh, up to the complete area of supply right here. The area was right here. I'm gonna show you right here. It didn't tap into it, so I didn't get into that to kind of go into short any kind of way. But you know, it's okay. Maybe we'll get a pullback here, and I can look for an opportunity to go short. Maybe. Um, yeah, we'll see what happens. I'm gonna wait it out. Market's not doing. It's not giving me enough today. We opened up somewhere around this area right here. So yeah, let's see what happens. Maybe we get a pullback, and then I can look for an opportunity to get a short. Even though we're bullish right now, I'm talking about shorts, right? But that's because the market is breaking structure to the downside now. So I always say, look at the higher time frame, and once you're at an area maybe of support resistance and price, rejects from that area off the higher time frame, to make sure that the lower time frame, your anchor chart, which is like for me the 12 range, is following suit, breaking structure to the downside, and wait for the pullback. So here is. Um, yeah, I'm just gonna wait. Looky here, the 12 range, to see what we got going on. I mean, the 4 range as well. Mm, yeah, there was a little long right here. Micro swing sitting over here. Price rejected that area. Could have taken it back up to right here, that 43.98. But I'm not really interested in such small areas like that. Market's breaking down. It's breaking structure downside now. So let's see. She's breaking to the downside. Um, yeah, I missed the trade. Should have went long already. Ah, okay. Come on. There we go. There we go. Okay. Yeah. Okay. Price pulled back to an area of support, guys. And um, let's see. Yeah. Price pulled back to an area of support, rejected it. And I took a look along here, but let me take a look and see as well. Um, okay. Okay. See, price coming back to the area. This is what I'm looking for right here. Price pulling back to resistance now. So I'm going to see what happens here. Okay. I have to be careful here because price just tapped right back into it. Could break here to the downside, and then turn right back around and push higher. Of pretty much this area up here. This area supply side up here. Price can reject this area here where it's at though. So let me be careful here um, as well. Let me see. Put a line right here so I can take a look at. Okay. Yeah, I'm short. Okay. Come on. Yeah, let me scout this area here. There we go. Okay. Pull back to this area up in here within the swing here. So, yeah. But there's really an area of demand sitting right, excuse me, supply sitting right here, 4406, 4407 area. But price is rejecting this area here. And I think we're going to push a little lower. So I'm going to take the continuation to the downside here. Where we at? Yeah, we should come on down a little lower here. Come on. There we go. All right, two little quick trades to the downside there. Scalping. Okay. So we're down here to back down here at the low now. Okay. So price could break this area and continue pushing lower. So what price did was pull back to this area right here of resistance. Okay. And be, just be open-minded because when price pulled back right here where 4403 was at, within this low volume area, which can act as an area of resistance. If you scale down to your lower time frame, you're going to see a swing here that kind of took out this area right here, this little swing right here. So right here at 4403, we'll say, okay. All right, we'll take a look at it. Price pulls back. This is the same area right here on the lower time frame. Swing here, price pushed down. It broke below 43.99 or 4400, and that's that area right here. Right here. Let's see, 44. Let's see. I'm sorry. Price pulled back to 4403 right here. Okay, 4403. What area is this? 4400. 44, 43.97. Yeah. Price pulled back to this area right here. There's a swing right here, which is this swing right here on the lower time frame. And this was the area right here. Okay, the swing to the downside, price pulled back. So this is an area of resistance here. So be mindful when price pull there, okay? Because there was a swing here to the upside. Price pushed up, pulled back, pushed higher, pull back, and then push higher, okay? So you have a little swing here. When price turned back around and pushed to the downside, retraces back to this area right here, okay? This is an area of resistance. If you look at your four range, you can see it sitting right here. Price rejects that area, you can go short, okay? And that's what I did. I went short, back down to the low of this swing right here, okay? All right. Okay. Let's see. Kind of choppy day. Kind of we can't pair. I mentioned that area of resistance, and now price wants to make, breaking the structure. Like I said, look for that area of supply demand off the higher time frame price to move back into, and then start to wait for price to break structure to the downside or upside on the 12 range to follow suit and start looking for trades and pullbacks. Okay, there was long entry right here. I missed it. Price push down, pull back, and then try to push lower, wicked out right here. This is a sign of rejection. You can take the trade. Let's see. Yeah, I should have taken that trade long. I missed that opportunity, but it's okay. Sorry. We'll see if we get a failed signal here. And let me see something here. Yeah, let me see what happens here. Let me explain something to you guys because a lot of people don't know what happens when price, like when it pulled back to this area right here. So price pushed down here and it pulled back and then it pushed lower. It broke structure here, right? So naturally, speaking, price is going to retrace back, right? When it retraces right back to what I call the neck of a prior swing, the swing to the downside, that's right at the neck of the area of resistance. And if you know how the institutions move, not saying this happens, all the time, but most times, um, you know, if you want to get to a better trade, look for the opportunity to take the trade tucked back within the area of the swing, which I call more so the area of supply, because selling took place here, okay? Buying took place, and then more selling. Sellers stepped it back into the market, and they pushed the market lower, right? So I want to get into the trade where there was selling followed up by more selling coming out of the swing, right? Okay, so that's what you want to look for. Um, let's see something here. So I'm going to explain this too, because when price pulled back to this area right here, right at an area of support, resistance, and in the same fact, same way, if price pulled back and it was support, be careful, because the institutions have a game they play when they pull right back to the neck of a prior swing. Okay, I'm going to explain that. I'm trying to pay attention to what's going on right here, though. So I'm going to explain that a little more, guys. Okay. Yeah, I was just trying to see what price is doing. But anyways, when they pull when the market retraces right back to, in this case, an area of resistance right here, okay, what's going to happen is that the institutions, okay, they pull the market back. There's a high here, okay, all right. So that's liquidity going to be sitting resting right there. They're going to pull the market back, push it higher to stop traders out, because they know traders are going to enter the market right at an area of resistance. Okay, all right, and that's their way of stopping traders out. And then what they'll do is push the market a little. They'll turn the market back around and move it back in your direction. Okay, which means you took that wanted to go short here. Okay, and then you get into the trade. You start making a couple ticks. Then they turn the market back around against you. They stop you out. They push the market a little higher, and then they move right back in your intended direction. They're running stops and running liquidity at the same time. Okay, so that's a game that the institutions play. Understand how that strategy works there. Okay, so that's why I always talk about supply and demand areas, and that's why I like to trade supply and demand areas more so. I don't like to trade it right at the neck of a prior swing, right at the neck in this case of prior area, which was support, is now resistance right here. They did. Market pulls back. Red candle closes. Some people will go short right there. You know, would possibly go short. And if they went short, market turns back around. They stop you out, and then they push the market a little higher, and then they win the market in your intended direction. So understand how that process works there. And the same thing when it comes to an area of support as well. Okay. All right. This is where I want to see what's going to happen here. But the problem with this is that I'm not going to have too much of an area to do much at, to do anything with. Nope. Let's see, maybe I can get into a little short here. Okay, so the market is, I want to see it come back up and test a little bit higher. Okay, it's almost there. A few ticks away. I really want to see it come back into 44.13 and a quarter, but 10. Yeah, let's see if it rejects this area here. This is an area of supply sitting right here, so where this is where price pushed up, pulled back, pushed higher, making a higher here, high here, breaking lower, taking out structure, returning back to the area now. So let's see if this candle will close to the downside and give us what we need. But it will be a very quick scalp. I'm not even sure if I'm even going to take it, to be honest with you. Probably not. going for point here. So, well, I was. Better bring it up. I'm gonna scalp real quick, guys. Price could come down here to 44.09, but I'm gonna scalp here. Pick up maybe 6 ticks here. Come on. One tick away from my profit target there. Scalping real quick. Let's see if we're going to hit it. There we go. Okay, we got filled a little entry there. I knew the market, if we're rejected here, I really want to see this red candle close, but this red candle close, we're going to be right here at this area here. So this is a sign of rejection. If you look at the 4 range, okay. Okay, so where I got in at is really I don't want to see price break. My stop would have been if I was placing a hard stop right above at 44.12 and a half, okay, which is right here at the top of this area here, okay. Um, that would have been my stop at the top of this candle right here, okay. But I knew price would come down and just maybe stop right here at 44.09 as it's doing right now. You see it pulling back, came down, hitting this area. Now it's rejecting a little bit here. So I'm not saying price can't come lower, but right now that's the area where price could possibly bounce at. Okay. So I'm not sure what price is going to do from here. Let's cover the topic about stop loss placement. A lot of people have questions about it. Some people like to use stop losses. Some people don't like to use stop losses. It just depends on your experience and style of trading. Some people just get out, hit the close button real quick, whatever the case is, once they see price, and come back to an area where they don't want to see, wherever they got into the trade at, and then they know where to get out at. So what I'm trying to say is that you should know before you even get to a trade, looking at the environment of on your charts, the market, knowing where and how much room you have to take profit, and knowing where your stop loss should lie in the event that you get into that trade and it comes back against you. You should know exactly where to get out at. A lot of people don't know. They take trades and have no idea at all where they should be getting out at, or placing their stop at. And if you're a beginner trader, I would highly recommend definitely putting a stop loss in place, especially if you're one that really you can't read the market, you really don't know where the market could come back to before it actually makes the move in whatever direction it's going to move. So I'm going to use this. Let's look at an example like when price was chopping here to the downside, meaning making lower lows and lower highs. This was from the 17th of March, that was yesterday. Okay, so this was around 10:50 yesterday. Price moves that pushes down here, pulls back, pushes lower, pulls back, makes a little low here. Okay, then it turns back around, bounces. This must be an area of support, and then it pushes up, pulls back, takes out structure, meaning breaking structure, breaking resistance, the high here on the way up, and breaking structure to the left. Okay, so what you want to look for is once price takes out structure, starts breaking structure to the upside, naturally speaking, you're going to look for a pullback or retracement, right? So you wait for price to pull back. I do not like to take trades as soon as price pulls back right here to the area of at the neck of support, okay? Because there's the institution is moving a certain way. I said this a little earlier in the video, today's video. The idea is price is pushing up here, pulling back, and breaks structure to the upside, right? Meaning more buying takes place in this area, okay? So if price pulls right back to this area right here, is this an area right at the neck of the swing where the origination or more buyers stepped into the market? No. The opportunity is greater. The probability is greater to take a trade when price pulls back to within the swing here, where as the market pushed up, it pulls back, okay? Sellers accumulate. You want to get into the move when the sellers, not sellers, buyers. When the buyers are accumulating their position to push the market higher, to break resistance, the high here, and to break structure to the left. All right? So it makes more sense to get into the move on the origination or the initiation of the move to the upside on a pullback, okay? Meaning when there's more accumulation of buyers or sellers step into the market. In this case, buyers, okay? So when when the market pulls back, I want to get into the move when price pulls back, it pulls into, tuck back into the swing itself, okay? All right, because I know this is where the accumulation process or step accumulation is happening, I should say, okay? So price pulls back, it pulls back to this area here, okay? This is considered demand, okay? Demand, okay? Why demand? Because accumulation. There's a high probability because there's more buying or setting up, buyers are stepping in to push the market higher, drive the market higher. Price pulls back, okay? When it pulls back, this is the area I'm looking for right here to, and in this standpoint or in this instance, to at least get into a trade when the market, when the candle closes green on, this is the 12 range. And most times, I like trading off the 12 range. Well, I'm looking at the 4 range as well, but it depends on how the market's moving, considering looking at price action. Um, if I can take a trade off the 12, or do I need to really couple it well with the 4 range to kind of see all the little micro swings in between? And that's a very important thing. Okay, so the market pulls back here, candle closes green. There's nothing here to really stop it going back to the top. So I'm long, probably back up to, if I'm long, I'm long around the 44. Excuse me, 43 and a quarter, back up to at least let's see here. 44.6, 44 and a half, somewhere right there. So, that's a couple points there. 2.5 points, whatever the case is. It's a good trade. Okay. I'm a scalper, not position swing trader. Okay. So if we go look at this on the 4 range, I'm gonna show you. So where's my stop going to be at? Market pushes up, pulls back, pushes higher. I'm taking the trade on the pullback. Okay. Let's go ahead and mark this. Right here. Pushes up, pulls back, boom, break structure, right? Break structure here too as well. On the pullback, tuck back within the swing, okay? Accumulation of buyers right here. Candle closes green, I'm going long. Got it? Okay, so where's my stop at? My stop is gonna sit right here below this green candle, right here. I'll blow it up so you can see it. Okay, right here, this candle right here, or you get this candle right here. You're taking this trade right here to the upside. You still have been good. It would pull back a little bit, but either candle's fine though, as long as price breaks back above. Let's see here, the area here I'm interested in is, yeah, the moment price really breaks back above 44, 43, 41, I'm long. So if I took the trade on the entry here to the upside, candle closes at 44, yeah, I can go long, but it does pull back some, about 2 points before it decides to continue pushing higher, okay? But that's fine. As long as you don't know there's anything above right here that can really stop you, you can trade for a few ticks. In this case, 2 points, 2.5 points, depending on which candle you got in on the trade at. But yeah, my stop's going to be, if you put, now here's the thing. I know, okay, if I got to this trade based on price action, based on this setup right here, my stop is going to be like right below 44, 43, 40, 41, pretty much, at the bottom of this candle right here, okay? Because this to me is the area of support that I don't want to see price break back through to the downside, okay? And looking at this setup. Now, if it comes back below 43, 41, I'm hitting close real quick. As a beginner trader, I would say, beginner trader, I used to always do 10, 12 tick stop, but I've gotten so experienced and well tuned and knowing and looking at price action, what's going to happen more than likely, more so 95% of the time, that price, if it shoots back below 43, 41, I'm not even taking maybe 2 or 3 ticks, loss or whatever the case is. I'm out immediately. I'm out. Okay. Now, I'm not telling you to put your stop at 10, 12 ticks, below this area here. But what I'm really trying to tell you is that you should know, based on price action and the movement, what's going on at this point here. What's going on? Price is taking structure out 2 ways. To the upside here, breaking this high here, which was resistance, okay? Breaking this high here, as well as breaking structure over here. When I see price breaking structure, and then I'm taking the pullback to the area where the accumulation started at, the buying started at, then I should know that the probability is high there for me to take a long entry. And if I trade off of the close of this green candle, my stop should be right below it. I'm not going to take much slippage of a loss. I'm not going to take, I'm not even going to wait for it to come back 10 ticks in this instance here, okay? Okay? The old me would have did 10 to 12 tick stops, okay? A loss, whatever the case is, stop loss. Placing a hard manual stop right here. I don't do that, okay? I know what the market's going to do is on me hit close, and sometimes they will. Like in this instance here, what do they do? Okay, what do they do? They know that traders, if they got on this candle right here, okay, went long. What happens? The market comes back and it wicks out right here. Am I going to get it out right there as soon as price, as soon as this candle, this green candle right here, came back below the wick of this candle here? No, because I know that the market more likely is testing that area again on a little retracement, a little pullback again. You know, second test. Okay, go long. Okay, I'm long here. Price pulls back at red on this candle here. On this green candle, it wicked down, closing below. They ain't closed below, but wicked out a little bit below this area here. I'm fine, okay? I am fine. As long as the candle does not close red back to the downside here, below this area here of 43.41, I'm still long, okay? Once a red candle closes below that, I'm out, okay? Truly, I'm out, okay? And it could turn back around and push higher, but then that's fine because that's the risk you're taking trading. You know, the market could close, the candle could close red here, boom, okay, and then it turns back around, goes in your direction. Take the trade again. You know, you got to take that risk, okay? So if we look at the full range, and that was at 1050. I'm sorry, is that right? Yeah, 1050. Let's go over to the full range, and that was this morning. Was it? No, not this morning. This was yesterday. I'm sorry. Yesterday morning at 1050. We'll go there, and I talk a little bit about W's and M's. In this case, we'll look at the W structure if we can find it here on this. Okay, it should be in this area right here. Yep. Okay. Yeah, because that's what that red line is. Okay. So, and here is the W structure. Okay, right here. Okay. So this is the area where price pulled up, right? Okay. Taking that swing out that I showed you. Let's take a look at it. So we can kind of do it side by side. Let's get back to that area. Okay, here it is. Let's pull it here. And the same area is right here. So we're talking about 43.34 is a low, 43.34. Okay. Price pushes higher, taking out the top here at 43.44, which was right here. Pushes up, pulls back, pushes higher. Okay. All right. Now, here's a swing we're interested in. Okay. The support area. Price pulls back to 43.40. 43.40. Here's another thing too. You got twice the confirmation there because of the confluence off the 40 level as well. Okay. Price pulls back to the area of demand. Okay. Look at the high volume area here. Okay. What do we have here? Price pulling to the high volume area. Typically, I like to see it pull back a little lower at the outer edge. I'm looking for an opportunity to go long, but price pulls back, okay? And when it pulls back, what do we see happening here? We see this is the area of demand. Where's my little horizontal, rectangle at? Right here. This is the area of demand. Price taps into it, okay? I'm going to go ahead and show you. I'm going to do this on the four, do it so you can see on the four range as well. Wait for this to come up. Here we go. All charts. Click on OK. Come on. There we go. Here it is right here. All right. Okay. Price pushes down. This is the area. Make sure this is the area, guys. Sorry about that. Yeah, here it is. Right here. Price pulls right here. Taps right into it. The box right here. Okay. Here's the W structure. It pushes down, pulls back, pushes down, boom, W. You go long at the close of the W. I show this time and time again. You know, it's kind of an entry level setup and looking for an opportunity to go long at an area of support, which, like I said, I look for the area price to come back to the area of supply. The W is right there. The close of the W, above the W, you go long. Okay, where do we go to? We're going to take that trade all the way back up to what I say, 43, 46, 43, 50 area right there. So you go long right here. Once the price closes above the W, 43.50, I'm taking it back up to this area here, right here. Okay? And you pick yourself up 2.5 points right there, right? Okay? So it's as simple as that, guys. My stop, like I said, will be right here below this area right here below this area. You've got to be able to see it. You've got to be able to know what price is doing. You've got to be able to know, um, price action, understand price action and price breaking structure, what it's trying to do, what it's trying to accomplish, whatever the case is. The old me would have set my stop, 10, 12 ticks back here. Yep, I would have taken some heat. The price would have came back here, but and stopped me out, whatever the case is. But that's the risk you take in trading. But I've gotten so well at doing so and knowing what the market's going to do that all I want to do is see price come back and tap into that area of demand in this case. If price breaks below where it rejected from, right here, meaning pulling back to the area of support within the area, pulling back to the area of demand within the area of support right here, okay? And once I'm long, if it breaks back below where I got to, it's like I said, it closes this green candle right here, it breaks back below, meaning it closes, a candle closes below it, then I'm getting out. Okay, as simple as that. I'm not gonna wait for it to pull back any further. Okay, I'm not going to risk any more, capital or my P&L. Okay, simple as that. I hope you guys understand that. That's off of an example. Going along using the W structure. So, like I said, wait for price to break structure two ways. Meaning, this case here, price hit an area of support somewhere to the left of the chart. Okay, pushes up, pulls back, swings to the upside. Okay, forms a swing, breaking the high here, resistance, going to the upside. Okay, that's one. Two, it also breaks structure. Prior structure where price is pushing to the downside right here, making a swing to the downside. It took out that high right there. Then it pulls back to this area of support that took out structure right here. When it pulls back to the area of support, not right at the neck, pulls back into the swing to the area of demand where the accumulation of buying took place. This is my opportunity. Okay, if I'm trading off the 12 range, I'll wait for the close of the green candle. Once price pulls back into the area of demand to go long, back to the high. Okay, as long as I don't have any roadblocks or barriers, meaning structure forming to the downside coming down that could actually stop me on the way back up. Okay, I hope you guys understand. I hope that's some clarification for you. But yeah, I'm gonna go ahead and close out today's video, guys. And it's today's Friday, so I wish everyone a great weekend. If you're trading, please be safe in the market, guys. First time watching one of the videos, hey, go ahead and hit that sub button for us. Join the team. That subscribe button, the big red button that says subscribe on it, and make sure to hit that little bell icon, which is the post notification, to make sure that you never miss one of the videos that is uploaded to the channel. Take care. See you in the next video.